Most buyers treat pre-approval like a formality, or even worse, like something their realtor is making them do before they're allowed to go see houses. But that mindset is exactly why deals can fall apart, offers can get rejected, and veterans lose homes they should have won. A real pre-approval isn't just about getting a letter. It's about working with someone who knows how to structure your loan, prepare your offer, and guide your decisions. So tonight I'm joined by two vetted VA pros, Stephanie Southholm in Hawaii and Ryan Atwood in Minnesota. They are dealing with very similar weather in Hawaii and Minnesota
Pretty
tonight.
much.
So bear with them. We're going to show you how to get this right from the start. What makes a VA pre-approval rock solid, what your lender should be walking you through, and why working with someone who doesn't take the process seriously could be the most expensive mistake you'll ever make. So with that, Stephanie, why, when a buyer goes out and meets with a realtor, why is the first question always, are you pre-approved? Why do realtors start with that?
Well, mainly the realtor wants to know, are you able to purchase this house? If you're going to go look at a home with them and you're not pre-approved, you may not be qualified to purchase the house. Many realtors will usually show 1 or 2 times for people before, they really are like, okay, next one, you need a pre-approval letter. And I think they do that out of the kindness of their heart because they are spending their time to show homes. But yes, they need to know what you're approved for, what is your budget, what is the max. And then also I always tell people there's also their own personal budget and max. And you really need to look at the numbers. You really need to know exactly, if it's a condo and it has a HOA, what is your max? If it's a single family home, what is your max? And you're able then to go with confidence, looking at the next home and knowing that you could put an offer on that home that you like.
So you already covered a bunch of this, but Brian, what should a buyer be looking for in that approval? What should we be uncovering? So we know their agent wants this. The agent wants a successful process. So they want you to go in fully informed and for them to know that you can buy the homes they're showing you. But what should the buyer be looking for in that process? I think this is one of the areas where there's big misconceptions. People just think, I just want to get a pre-approval letter. What are buyers? What should they be thinking that they're going to be getting out of this, and what questions should they be asking?
Yeah, I don't want to make it sound this way, but sometimes if it feels too easy, it might have been, right? There's a lot of companies that are happy to hand these out like candy as kind of just a tool to bring people in. But it is a process. There's a lot of steps throughout the pre-approval, that process that we're going to talk about. And I always encourage to everyone, to realtors and to buyers, to actually read this. What work went behind this pre-approval to actually prove that things were done, and that we can all go to bat for you and say, hey, this isn't just a letter. This is as close to a guarantee as we can get based on everything that we can provide up front and the knowledge we can have. So you too don't have to worry so much about that. We'll talk about the individual pieces too in a bit, but it's really just understanding that, hey, things were looked through, right? We verified everything that you put on that application. We're not just going off of whatever we want to feel like, but we're cross-checking everything. We're checking those pay stubs and making sure we have everything in hands to say, hey, this works. You can feel confident about this. This fits in your budget. You're going to be happy with this, and put all that information out up front.
100 years ago, way back in the 90s, when I started doing this, agents would still use the term pre-qualification. Agents have really put that out of their vocabulary because they want to know. They want to know this is truly something rock solid that they can depend on, that you can depend on. But bottom line, Stephanie, what is the difference between just a pre-qualification, which isn't so much a big deal anymore, but sometimes people have that in their mind, I'm not ready to get pre-approved. I want to get pre-qualified. What are the differences? What are some of the pitfalls of relying on a pre-qualification versus a pre-approval?
First, I want to say that actually this language is like descriptive language, right? It's how we actually use it in the industry, right? In real estate and mortgage. Because officially there is only, before you actually turn in a loan, there really is only a pre-qualification. But the way that we actually use this terminology today is that a pre-qualification is basically like you could go online and put in your name, social security number, and it spits out something that says you're pre-qualified for this amount. That is not the intention of what a real estate agent or a seller who's going to accept your offer needs. They want you to submit a pre-approval, and that would be, yes, you fill out the application form. You've given us all your information about income, assets, debts, and then we're doing a full credit report poll, and we are looking at all your documentation, pay stubs, W-2s, tax returns, any information about properties that you currently own, driver's license. We're looking at all of these things. We're verifying the information you gave us and plugging that in, and we're running our automated underwriting system, right? That is, and we're getting an accept eligible. That is a full pre-approval, right, with AUS run. That is it, the intention of what agents want. And in fact, we'll see on some of the contracts now, there'll be a section that says, pre-approval is required by this date, and with documentation or without documentation. And in every market's a little different, but in Hawaii, our market is very competitive, and almost all of the sellers, agents are going to want to see a full pre-approval with documentation having been looked at.
So you brought up a really, really good point. And again, the verbiage and the descriptions that we give to this, we talk about this as pre-approval because that's the language that both realtors and borrowers understand. Yeah. But really what you just described is pre-underwriting. You really underwrote that file. You're not the underwriter, which is why we call it pre-underwriting, but you put on your underwriter glasses and go through that file and review it just exactly the way they are. Because a lot of times the thing that I get, and I'm sure you guys get the same thing. Buyers will say, well, you sent my loan application. It says I make $6,400 a month. I actually make $7,500. You're like, no, last month you made $7,500, but that is not the actual number that the underwriter is going to use. So Brian, maybe take us a little bit deeper in terms of, we don't need to go down in the weeds of what one individual off case might need for documentation. But for most buyers, what are they providing for documentation? And when we say pre-underwriting, what does that look like? What are you doing once you receive that documentation?
Right. The key word there is just verification, right? We have to make sure that everything that's on there is actually the way that the documents show and the way an underwriter is going to review. So for most people, if you're a typical W-2 paid person, it's going to be 30 days pay stubs, your last couple of years of W-2s. We're going to want a couple bank statements for any accounts that you're planning to use if you're bringing down payment, and then of course to cover closing costs. As Stephanie mentioned, we're going to run credit as well. There are some lenders that are able to do soft credit pulls and still run AUS, which is the automated underwriting system, versus some will require hard pulls on everything. So just want to have that discussion up front too, if it's soft pull or hard pull. And the golden ticket that we have not brought up yet, I think we're kind of waiting for, is that COE, right? We have to have that certificate of eligibility for veterans. If you're looking at the VA loan, as magical as your file can look, there's nothing happening without that COE. So whether you ask a lender to pull it for you or you want to pull it yourself from eBenefits, we got to have that up front. And one thing I wanted to caution here too, to someone we're talking about concerns about terminology, is there are certain lenders that are well aware that realtors want pre-approvals. They don't want these pre-qualifications anymore, right? So we would hope that meant they all stepped up their game, right? In a lot of cases, they just changed the header on their letter to say pre-approval instead of pre-qualification, but didn't do all these steps that we're talking about of cross-checking everything, calculating income that way an underwriter is going to, and then running everything through the underwriting systems to make sure that people want this loan, that that's going to work, that people want to actually fund it.
So every lender, every loan officer is going to be a little bit different, pretty much similar, but some differences here. So we just talked about so you're getting pre-approved. What are you going to give me? What documentation are you going to give? We're going to need a whole loan application. So we didn't really talk about that, but for both of you, Stephanie, why don't you start? And then Brian, what does it look like? So a realtor refers someone over, a friend or family member, someone you go to church with says, hey, call Stephanie. What, do you start with a phone call? Do you make them start with an application? What does that process look like for you?
For me, I love starting with a phone call. It's like, why are you going to have someone fill out an application if you're in the phone call, like they want to buy a $200,000 house and the house is $1 million. We have to have that conversation. Maybe the real estate agent has had it, maybe not. We can't prevent anyone from filling out an application, but I want to have a realistic conversation with the buyer. I want to know, what are their goals? What is their timeline? What have they ever bought a house before? What do they think is the pre-approval process? And then I step in and go over my pre-approval process so that they're clear about what this looks like. And I can either take the application by phone, or I can send them a link to start filling out the application. But I'm very clear about the timeline. After our phone call, I send them an email that lays out the timeline, has a link to the pre-approval application, and then says what the next steps are, and the list of documents needed to upload. And then I said, hey, I'm here. If you have any more questions or concerns, I then look over the application, make sure all the parts are there. If I have any questions, I call them back. And, sometimes there'll be some missing information that you need more clarification on. How long have you been in this job? How long have you been in this industry? A lot of people don't fill that out, but that's really important. I ask questions like about dependents. There's some things that people always kind of seem to miss, right? And then I say, hey, this looks good. Preliminary numbers look okay. I do, we should do a hard credit pull. I send them the link to the hard credit pull for them to fill out and pay for. And then it usually takes me under a day. It just depends on how busy my schedule already is to complete that full pre-approval.
One question for you. So you offer the option. You can do it online. You can do it with me here over the phone. What percentage do it over the phone with you versus going through and completing it themselves online?
10% maybe.
Because most people, it's more efficient for us to send you the link. It's pretty thorough. We have these online applications, but some people do. I would say the same thing. I would say it's more like less than 5% from my end. But Brian, how does that process compare with yours? You really don't need to walk us through the whole thing, but how does yours differ, if it does, in any way from that process?
Sure. No, a lot of similarity, of course, right? We're all checking the same things. Where that first step sometimes just depends on how that introduction went, whether it's hey, we bumped into somebody and they said, hey, I'm kind of sort of thinking about wanting to buy next year. That's a phone call, right? Let's get your wishes in line, talk through the basics. And at that point, we can rely on what you're saying because we can build off of that. But if you were saying, hey, I'm not sure about my credit, I'm not sure, I've had some goofy income changes, really the application is what's going to tell that. Versus some introductions, which I'm not a fan of, are a realtor saying, hey, this is, client John Smith, and we've toured a house today and we want to write an offer today. Like, okay, we've got to move. Like, okay, hold the phone call. Let's get this thing and let's get our ducks in a row and make sure this works. And it can go as quickly as the client can a lot of times, right? If they've got their pieces in place, online applications can be fairly quick. And if they're able to just upload documents, as Stephanie said, you can go through those details fairly quickly, same day for sure. But beyond that, if it is somebody just getting pre-approved, figuring things out, and then going out to shop, I like to emphasize too that, we can send those TBD to be determined pre-approval letters, but this shouldn't be a blank check going out there saying, hey, call me when you're under contract, right? This is a continued conversation, making sure we're being set up for success. And most of us loan officers are going to say, hey, bother me, right? Please call me, please text me. You see something you think is the one, send me the address. Let's go through the numbers for the specific property because rates change every day. And in some markets, I know here, sometimes you cross the street, you're in a different county and your property taxes doubled. Like, well, that would have been really nice to know before you bought it. So we just want to say, hey, continue that conversation. The biggest piece to this a lot of times is just communication. We have to know what's going on, what you want to accomplish. It does not matter if we can get you a $2 million loan if you want a $500 a month payment.
Well, you know what they say about opinions. Everyone has one, so take this for what it's worth. But the three of us believe pretty adamantly that you need to have a front-end conversation. No one should send you to a loan application. I actually know successful loan officers, successful in terms of people who do a large volume of business. And before they'll talk to you, they say, here, go here and complete the online application. It's just not the way that I like to do business, or most of the people that I talk to, because there's so much that we uncover in that initial call. First off, and most importantly, we get to answer your questions. No one should be asking you questions such as your date of birth and social security number until they've answered yours, and you make sure that this is a person that I have some level of rapport with and I'm comfortable and trusting. So there's that piece. And then sort of the secondary piece, we all made reference here to uploading docs, using a secure portal. This is important documentation. Most pay stubs and W-2s do redact the social security numbers now, but this is your private social security number, private personal information. So if someone asks you to just email stuff over, that's probably a sign that they're not doing it the best way possible. So there's some of those pieces. So what I would say is mistakes from the loan officer's perspective, hey, complete my loan application, email me over some documentation. Stephanie, what do you see when you start this process, or you send that application out? What are some of the mistakes that you see from borrowers that they're making in this process, making it harder to get them what they want?
First, I wanted to mention something you just mentioned, though, and that is when you start the conversation or you start the relationship with a buyer with a conversation, right? That is a perfect time to also kind of instill some consumer behaviors that you hope that how I want to be treated as a consumer. For example, teaching them the questions to ask and letting them know that this is how a relationship should start, whether it's with their loan officer or their realtor. And so hopefully they see the difference, right, between like a big box lender and us. But it's a great time to just have that conversation and educate. So that was that first. Okay, so mistakes. The most important thing is to follow the directions, right? In my email, it's very clear. If you read everything in my email, we're golden, right? I would say the biggest mistake is not following the directions, right? Or not realizing that it needs to be as complete as possible, right? So the application, when you fill it out, even if you're not sure why there's a question, text me, ask me why we're asking that question, but don't just pretend that it doesn't exist. And then also with the documentation, people, kind of our biggest pet peeve probably as loan officers is when someone sends a 10-page bank statement in individual pages. Now, I get it that you may not have access to the full document and this is what you got and I will work with it. I can do it. Like, that's my job. But if you can, to have one document be one document, right?
I'm saying you're being picky, because I thought when you said the number one pet peeve that loan officers have is the person who pulls up their phone, logs into their bank account, and takes a screenshot of the balance and sends
the
that
screenshot
over.
are the number two.
Okay. I say screenshot is number one,
because screenshot I still I can go back and say, that's not going to work. Bank statement, they've officially given it to me. I just it's going to take me 5 minutes, 10 minutes to piece it all together. But I would say that's really important. Make sure everything's in a PDF. Make sure there's no screenshots, and that you're not redacting anything off of the documents. A lot of people think they have to go black out their bank account number. No, we need the bank account number on there.
Yeah, not only do they not need to do
right.
it, if they do it, they're going to have to come back and provide that bank statement to you again without it.
Yeah. And another part of the conversation that we have here at this point is, aside from just the application, one of the important things is once you've started the pre-approval process, it means you stop doing other financial things. And by that, I mean, don't go take out a personal loan the next day after you've gotten pre-approved. Don't go move a whole bunch of money around. Just stay status quo while you're looking for homes. I would say that's another big mistake that people make, because it is the pre-approval process and it can mess us up a little bit.
For sure. I'll add on to that a little bit. Just, as Stephanie said, just answering everything, but beyond that, be honest too. Some people treat this like it's a job interview and they're saying like, "Ooh, I want to put my prettiest self on this application," but we need to verify everything. So if we're trying to not be honest about some skeletons in the closet or some history that we've had, it's much better to have that discussion now. And I think it leads back to, this is why we should have that phone call first. We should talk, we should get a line, make sure we have that rapport before we go in, because if you can't trust us enough to be honest on the application, at that stage, it just really doesn't matter. We can talk through it. We can find solutions. We can be prepared versus finding out sometimes days before closing when there's a lot of families relying on everything coming together.
Also, another thing is be honest with your spouse or the person you're going to do the loan with before you talk to me, because what happens is we're going to talk about everything we see on the credit report. And I've been in situations where the other spouse, I always say, are these the let's go over your credit report. Let's go over all the trade lines that's on your credit report. We're just looking at the facts here. We just want to go through and I want to make sure these are actually the trade lines that you have, because sometimes there's mistakes on credit reports. and we're going over the trade lines, and the other spouse goes, I don't know what that is. And then spouse number one does know what it is, and they haven't had that discussion. So yes, please have those discussions before.
And before you think she's kidding, a week ago I had a client who he did the annual credit report, the free annual credit report, and he goes, I was ready to tell you that we have no debt, but I discovered that my wife has $19,000 of credit card debt that I was unaware of. So it can be a discovery process for both us and for you and your spouse to go through. Let's look at this. So we talked about the process. You've gone through, you've pre-underwritten them. You've gone through, hey, great. You're approved for your VA loan. You wanted to buy 500. We can go up to 550, 600. You're great. What does the buyer or the borrower actually get when you finish that process? What does it look like from their end? What are you providing? Is there another phone conversation? How does that look?
Yeah. So for me, once we finish that process, we do have a second call. I'm like, hey, we had our discovery, our wishes and goals. Now we can go over all the facts and start talking through what this looks like, make sure the payments align based off of the rates that we're seeing. And then once we're happy with that phone call, we send out an email to the realtor partner and to the client just saying, hey, they're pre-approved. Here are kind of the limits. That is not the pre-approval letter. Us personally, we, again, don't send out that blank TBD pre-approval. I know some companies do, which can be okay as long as the right communication is happening. The worst thing, and I actually had this morning, was receiving a purchase agreement that actually went under contract 4 weeks ago. Like, well, we've missed some.
We should be closing today. I wish I had known that.
Yeah, no, it was thankfully long extended still, but like that was a shocker. Like, I'm misreading something. There's a smudge on my computer. No, but we just encourage that conversation, right? Like, please keep it going. You spend so much time with your realtor viewing the houses and being prepared. We don't want you to fall in love with something that doesn't fit the goals that we wanted. So we personally write pre-approvals specific to property and specific to offer. So we make that, make the numbers match. This is more of a style and preference thing, and it can be different by market. But in my opinion, if showing somebody you can buy a $500,000 house, but you're making an offer on a 3, could potentially take away some bargaining power.
So there's the bargaining power piece. Any other reason? I tend to agree exactly with you, but there's a lot of people that do it the other way, that send out a generic pre-approval letter. And some people want that. Well, don't I get that now? Like, yeah, I mean, it's subpar way. In my way, again, opinions are take them with a grain of salt. Yep. But what are some of the other reasons why you prefer to do custom pre-approvals with the offers that you're ready to go with?
Well, for the client, it's because I want to have that financial discussion first. So going through those numbers, pull those taxes, update rates, make sure that we're still in the right spot. But when it comes back the other side to say, hey, I want to go to bat for you, to that listing agent, I want to talk to them and say, look, we've cross-checked everything. We've run your specific property and the specific number through the automated underwriting systems. We know this is a slam dunk that we can get through very quickly. So I think it shows that we've gotten our ducks in a row ahead of time, right? We've done the homework. We're not just throwing out offers and seeing what happens. Being able to go to bat and put specifics in the pre-approval letter of your property and your purchase price, and also following that up with, and we made sure that, hey, we've got the COE. We've verified that this property already has VA condo approval. Like, we're a slam dunk here. We're ready to go.
And listen, every realtor is different, right? I had one the other day that the listing agent calls me out of the blue. I'm like, I didn't even know these people were still looking at houses. Well, I haven't talked to them in 2 weeks. And at that time they were kind of cool on their jets because nothing had come up. And we look at it and she goes, I said, we initially pre-approved them a little while ago. I'm going to have to get updated pay stubs, but they've been in their jobs forever. It's salary. There's no concerns there. She goes, well, I mean, this is a pretty recent pre-approval. It's from September. And I'm like, okay, if that's recent to you, that's great. Because I've also had the flip side, and I'm sure you guys had a realtor say, well, this is from a week ago Tuesday. I'm like, okay, I'm sorry. I didn't know we refreshed them every day. So really, beauty's in the eye of the beholder. But it's certainly, I tend to agree that we want to do it custom. We want to say, hey, to the presenting agent, I would love to follow up. If you want to copy me on that, I want to follow up and sell the strength of that offer. Because again, I don't think most buyers realize how rare that is. It should just be common practice, but it is not. And it can go a long ways towards separating you, and specifically to VA buyers. There are a ton of misconceptions about VA financing. So we get to get in front of that. We get to have an in-depth conversation and put those to rest. So without putting words in your mouth, Stephanie, do you do the same?
Yes, I do. Yes, almost very similar to Brian. Like as soon as someone is, I've completed my automated underwriting, pulled certificate of eligibility, looked at all the documentation. I also have a phone call. I usually have my email all ready to go, and we have a conversation about what's on the email. We have a conversation that we're actually pre-approving you for a total monthly payment, right? Pre-approvals are based on everything by the monthly payment, right? And then we kind of calculate that out into a purchase price. But the reality is, we live like in a lot of condos in our market, and so that does vary. The purchase price will vary by what the HOA is, and so we really focus on this monthly payment, this total monthly payment. In that pre-approval phone call, we also talk about if like how monthly payment changes with rates, right? We don't really talk about rates until we get to this point. And then we have the conversation of, when you're ready to put an offer in, call me back, similar to what Brian does. Call me back. I'm going to send you a new fee sheet. I'm going to show you what a monthly payment is for that property. I'm going to send you a link to the tax records. This is also an education moment, right? How to have them be savvy consumers. Look at all these different parts of the purchase. And then I will write you a property specific pre-approval letter with the property address and with that exact purchase price, like Brian does. Because you're right, I would say 80% of the lenders out there do not do that, and I think it does make a difference to the sellers. I know it does in our market, and also I think the agents like it. It shows that you're like, for us, it shows us that we're a local lender. So I think that's just a really important step, having that after pre-approval phone call. Yeah.
A piece that I would add here, from a buyer's perspective, say, okay, I'm going to get pre-approved so I can get a pre-approval letter. So they always want the letter. So if I go through that explanation and say, hey, we prefer to give you a custom one, I can give you a generic one. You can give that to your realtor. I would prefer to have the conversation with your realtor and open up those lines of communication. But what I also say is, this is not the most important part of this process. The most important part is, we had the discovery call, now we have the options call. Now for VA buyers, it's generally going to be VA, but we'll at least show them 0 point and 1 point. Most VA buyers don't want to see 1 point, but at least it shows them sort of the relationship between those. But to me, the most important thing that they walk away with is, what can I buy? What is my total monthly payment? And how much money do I have to have? And what are my options for getting it? So thankfully with VA loans, we have a ton of flexibility with all of those. But it is shocking how many times I talk to someone, I've been pre-approved. Okay, cool. How much you pre-approved for? 500,000. Okay, what type of loan was that? It doesn't happen with the veterans, but what type of loan was that? I don't really know what type of loan. What the interest rate? I don't know. Well, how much money do you have to have? I'm not sure. I'm like, well, how were you pre-approved if you don't know any of the things that are going to matter to you once you get a house under contract? But it happens. So the pre-approval letter, either custom or at that time, but going through numbers and knowing, as Stephanie said, here is the maximum number or the number that you've been pre-approved for. On the subject of VA loans, I said one of the differences in dealing with a VA buyer is we're not really looking at options of different loan products. It's maybe different loan structures, different price points. But Stephanie, what else is different about going through this pre-approval process, if anything, for a VA buyer?
I think one of the biggest things that get missed, and I've seen it with other lenders, and because their clients will come to us and cry at the very end of a loan because the certificate of eligibility wasn't pulled. And sometimes we can work around that and find ways to, maybe it's a different price point, or maybe that loan isn't going to work. I think that is the biggest thing that gets missed. But for VA, also for VA, we are calculating something called residual income. So I also see loans fall out from other lenders because literally residual income was not calculated until the final underwriting. And this, I don't know how it happens, but it does. It is one of the most important things in a VA loan, especially anybody that has over a 40%, 41% DTI. As you know, VA loan does not have a DTI, debt to income ratio requirement. However, it does have a residual income requirement. And residual income is your income after taxes, after a certain portion of utilities. We have a worksheet for it in our lending system. And, you know, like when I'm doing a pre-approval, and if that residual income is like, oh, I'm only $100 over residual income, I know that we absolutely cannot go over that monthly payment, right? If I have like $1,000 or $2,000 or $5,000 over my residual income, I know we have some flexibility. And so that's why this is very, very important for a VA loan. I would say those two. And then the last would be in our market would be the condo approval for VA. Those are the three things that I think really differentiate VA loans at this pre-approval process.
And
But I'm sure I'm missing something too.
There's a lot here, but Brian, before
Yeah.
you jump in on that, we got a couple comments. Matt says HOAs can make a surprising difference in the amount someone qualifies
So
for.
much.
100%. And especially like everything else with inflation the last few years, we went from maybe 350 was the norm to some of these are $600, $700, $800, $1,000 a
Right.
month. You probably see in Hawaii, you probably see even bigger numbers for that. You know, another comment here that watch out for the $600 a month HOA shocker. That is 1,000% true. So from that perspective, anything that you know about your situation, like Brian had mentioned, hey, we can cross the street and be in a different neighborhood that has much higher taxes. Anything that you know or may think about this, there's nothing too small to share with your lender. And hopefully they're paying attention and taking notes and making sure that they know this and it's noted in the file. So anyone else working on the file, a processor, an underwriter has that information as well. But with that, Brian, any thoughts, VA specific stuff that you want to make sure you're going through on a pre-approval?
Yeah, first and foremost, I just double down on the COE just because I think, you know, empowering realtors to ask about it up front. It should be on pre-approval letters. Veterans, if you can't pull it yourself, ask your lender to get it. And if they respond like some do, saying, "Oh, we do that like in processing," absolutely not, right? It's going to just be an absolute mess coming up if we don't have that up front. You're not pre-approved without that COE. Understand what it says, right? Make sure if you are using secondary entitlement, to make sure that like, hey, you'd have the ability to purchase that next property if you're moving. Otherwise, depending on market for really big military towns, understanding that like, hey, a lot of people are getting pre-approved based on military income, but they're separating, right? They're retiring, they're separating. So we have to have that future plan. Do you have job offers in place? Is there disability income? What does it look like? Because it's not just about that pay stub, right? It's about what's your income going to be next month, next year, to the next few years. So we have to just dig through those pieces, make sure there's a story. There's a lot of PCS and relocation, everything with military that we don't often focus on for everybody else. But we need to have that conversation. What is your next chapter look like as a whole?
And that's one of those pitfalls of using it. Every loan officer will say, yeah, I can do VA loans because they're approved to do VA loans. They have sources for VA loans. But if you're not doing them every day, there's so many things. And that PCS is saying, okay, I got an LES and it's saying, hey, the BAH is this. Well, you can transfer it over here. That's $1,000 less. I mean, it can make a big difference. And if you're not working with someone that knows this, that they're a big box lender, they're a kid in the call center that's done this for 6 months, you can get bit by these things. So those are the important pieces of it. Brian, what do you think when someone asks, well, when should I start this? I want to buy next spring. I want to buy next summer. I want to buy sometime in 2026. When should this process be completed? And depending on when they start, does it look any different?
Yeah, it depends what you mean by process, really. I will always say the sooner the better, right? If you are thinking 2026 is your time, it's never too soon to have a conversation, right? If you do think there's absolutely no chance it's going to be within the next 6 months, 6 to 12, you can just have that conversation, no application needed, start understand, get your documents together, have your plan in place. I think one of the most important first things is just start researching your team, right? There's so much trust that's going to go along. At the end, when you see those giant closing stacks of paperwork and you're like, no idea what's in them, you really hope that the team that you're working with set you up for success. So the sooner the better. If you are thinking 0 to 3, or I'd even say 3 to 6 months, absolutely, we can work through that pre-approval, right? Have the conversation first, like we discussed, but getting that application in, especially if the lender has the ability for soft pulls, or maybe we have enough data that maybe a pull wasn't needed right away, depending on your timing. But ideally, we've got that soft pull. We can try and identify things that we didn't know about up front, things that we can work on, improving score. It's amazing. One of the pieces we don't often talk about with clients is interest rates are in buckets, and sometimes as little as a few point difference can equate to thousands of dollars. We just had somebody a couple of weeks ago. I was like, hey, we just missed that threshold just by a few. Let's pay down some cards. We've got a couple of weeks till closing. Timed out perfectly, and it was $2,500 in their pocket. Paying attention to those things is really important. So The sooner you have those answers, the better, right? And not if there are issues, we want to know up front, but get your budget in place, have your team in place, do those interviews, right? You're going to go into something really significant, one of the biggest purchases of your lives together. We should know that we want to work together.
So another timing question here, and this probably should have asked this a little bit earlier, but Stephanie, one of the big ones is how long is my pre-approval good for? Because they've heard a lot of times people they talk to a big box lender, they got a pre-approval letter and it has a date on there, and like, oh, I know they're not only good for 2 weeks or whatever number they've been told. What does that actually look like in the real world in terms of a pre-approval? And let's say you do talk to someone now and they're saying, when we get through the holidays, we're going to get serious in January. So what does that mean for that pre-approval, and what does that look like?
Yeah. I mean, in general, they're good for 3 months. I mean, when we say good for 3 months, we mean the credit report is good for 3, sometimes 4 months. So, however, let's say at the end of that 3 months is when you're putting an offer again, we're probably going to have to pull credit again. Now, once I have because I do a thorough pre-approval, once I have someone pre-approved, let's say we're 4 months out and they want to start looking again. I just need updated, pay statements and pay statements and bank statements, right? To know they have enough money to do the loan. So, I mean, we don't have to repeat the process completely. We just need updates, and we may need to repull credit, right? I want to, though, say one more thing about what Brian was just saying about timing. We didn't talk about active duty. And if you're active duty and you talk to a loan officer or a mortgage broker, mortgage professional, as soon as you get orders. I don't care if they're in writing yet. I start talking to someone, because we want you to have your options open by the time you're actually PCSing. And as you know, the more data you have, right, to make your decisions, the less stress you're going to have, right? So the goal is for you to have as least stressful of PCS as possible. And that might mean not buying a house, but for you to have the information needed, how much is it going to cost to buy? How much, what can I get if I want to live on post? What can I get if I want to rent in the market outside, off post? Have that information ready to go. And it's never too early as soon as you get orders. So I would say, if you can, don't wait until a month before. Although if you have short orders, we can deal with that too.
Anything can be worked with. And certainly the answer that I give to people when they ask, well, how long is this good for? It's good for as long as the underlying information remains the same. We can refresh anything: credit report, pay stubs, just don't lose your job. Don't change your job and not tell us and have it be a completely different line of work, a completely different type of pay. Don't buy a Ferrari. Don't miss your credit card payment. Any of the simple things. And most people are pretty deliberate when they're in that home buying mode, and they don't do any of those things. But as long as the underlying info stays the same, we're totally good.
Right.
So
no big life changes, no big financial changes, no big moving of money like we talked about earlier. As we all have this government shutdown that just happened. And so obviously there was a lot of people who were furloughed. We have a large DoD community here in Hawaii. And so we were dealing with that, right? Needing for people we either had to choose a lender that was going to waive that requirement, or, that were ready to go as soon as the furlough was lifted. So that was obviously something that was like a big change since we got pre-approved, right? But we worked through it, and we're ready to go as soon as things subsided. So any changes, call me. We'll reevaluate the pre-approval. We'll move numbers around. We'll see how that affects you.
Right. I would tell clients early on that the pre-approval doesn't expire as long as our communication doesn't expire. Right. As long as we're talking, getting a pay stub or a refresh credit's easy. But if we're 30, 60, 90 days in and haven't heard from you in 30, 60, 90 days, that's no good anymore. Don't use it.
I'm going to use that now.
Yeah, please do.
That's a good one.
I think we've done a great job of giving the people the why, the what it should look like, what you should walk away from, and the pitfalls to avoid. So with that, anyone watching this is probably thinking, hey, I want to get into a new house in 2026, unless they think they want to do it here before the end of the year. So with that, Brian, what is one smart move someone looking to buy in the next 6-12 months can make between now and the end of the year?
I think above pretty much anything else I would say is you got to start researching your team, right? And
Mhm.
don't have to just click and find the first name. You can have conversations. You can get prepared, especially on the realtor side. I think having that cohesiveness with just your demeanor and personality is so important. You're spending a lot of time with them in houses where sometimes we're just the numbers nerds, right? You might not like me as much. That's fine. But have that team, have that confidence, know that people have your back and your goals above all else. And then you can go in and start worrying about the documents and things after that.
Mhm.
How about you, Stephanie?
I would say that too, you know, once you've established that really good relationship with your agent, your real estate agent and your mortgage professional, it's okay to pick up the phone and call and ask questions or text and ask questions. I expect it, right? And I think there's some people who are, oh, I don't know if I want to ask, but like that's what's going to kind of keep the communication open. And that's also going to help me to kind of figure out what your needs are, right? And also for the real estate agent, for them to figure out what their needs are. I have a client who I was working with for 4 years and she just closed. She actually ended up doing an assumption and I'm very happy for her. But actually we had never met in person, right? For 4 years. And I just met her as I dropped off a closing gift. But like, I'm also happy to meet people face to face. And, sometimes the baby boomer generation really wants to meet you face to face. I'm totally fine with that. I'm happy to meet you at a coffee shop, meet you face to face. That's okay too.
Yeah. Your professionals shouldn't be dogmatic about, hey, this is the way I do it.
Yeah.
I mean, you can't have as many systems as you have customers, so you do have to have your system, but we also have to be flexible to work with that. I'm going to kind of piggyback off of the same thought is when people get into this mode, they often start thinking in terms of, I need to shop for the best rate and the lowest fees. Most reputable lenders are going to be in a pretty narrow range of rates and fees. So you're really shopping for that team of pros that listens to you, hears you, has knowledge, experience, and can guide you through this process. Because no matter how many times you've done it, even PCS 5 times, you bought 17 houses, you're not an expert at this. This isn't your day-to-day. This is what we do. This is what your real estate professional does. So make sure that you're utilizing your team and make sure you're getting a team of pros there to support you, not just to quote a rate and try and move on to the next call that's coming in. So both of you, Brian, Stephanie, appreciate you being here, walking us through it. We will be back next Tuesday with another group of pros, another topic. Until then, have a great week.
Thank you. Bye.
Thank you.